Hello all, welcome to today's Market Vision wrap-up. In this video, we will break down the key movements in the Indian and global markets, covering major indices, sectoral performance, crude oil trends, and international market reactions. So let's begin. Indian indices rallied strongly. Nifty surged 161 points, roughly around 0.67%, and had closed on a strong note. Similarly, Sensex jumped 520 points, roughly around 0.65%, reflecting broad-based buying. Overall, the market sentiment remained positive and strong global cues and sectoral strength performed really well. Sectoral indices traded really strong. Today was a fantastic day for key sectors like IT sector, which skyrocketed 4.34%. The major gainers from today were HCL Tech, Coforge, and Oracle. Auto sector as well rallied 2.38% as there was strong demand and positive earnings outlook boosted the stocks. Pharma moved around 1.4% up. There was a defensive buying that continued. Realty sector again gained 1.33% today because there is improved housing demand supporting the sector. So IT and auto were the stars today, while pharma and realty also contributed to the bullish momentum. Crude continues to bleed. WTI crude slumped 2.8%, trading at $61.89. Brent crude as well fell 2.52%. Now it is trading at $65.74. Rising global recession fears and weak demand outlook is weighing on the prices. For India, falling crude price is positive as it will keep a check on the inflation and current account deficit. Lastly, we see global markets rejoicing. On Asia front, Nikkei was up 1.89%, Shanghai was slightly down by 0.1%, Hang Seng however had surged 2.37%. On European markets, DAC was up around 3.17%, CAC gained 2.3%, whereas FTSE rallied just 0.96%. On the US markets, Dow Jones is up 1.58%, S&P 500 rose roughly 2%, and Nasdaq soared 2.8% because there was tech stocks which rallied. So positive momentum across the major markets driven by easing inflation concerns and strong corporate earnings has helped the markets to rally worldwide. Now let's discuss from the perspective of charts and open interest to understand how our markets are expected to open and trade for tomorrow. As you could see, this is the Nifty 50 chart. So we always refer the daily candlestick chart. Now if you see today we opened on a higher note, and then from there we had slipped down in maybe another with the start of the market around at 10:45-11 we were almost towards the fag end of the day, and then from there we saw a strong buying somewhere around at 11 o'clock am, and then the buying momentum continued till it moved towards the higher highs. It almost closed toward the beginning of the day from where the market had opened today. So overall there was a recovery in the markets. However, there seems to be some negativity that has already been seen. So this candle that it has formed is kind of hanging man. So now we have to see tomorrow how the markets are expected to open. Suppose if market starts trading below these levels of 24,200 odd, then we would consider this as a negative for a Nifty, and then from here on we might start seeing some dips coming in. So the immediate support for us is roughly around 23,800 odd levels, from where we had significantly seen the buying happening. But yes, as we have been discussing, that the movement from 23,800 levels to 24,800 odd levels is going to be difficult for Nifty. We might not swiftly cross these levels and start trading above. We might continue to consolidate in this range for at least 2 to 3 weeks time. Now that we already have the news, bad news in fact, the terrorist attack on the Palgham, Kashmir. So this might, keep our markets under check, because Indian government is again expected to take some actions, and we have to see to what magnitude these actions would be taken and how it is expected to overall impact us on the news front as well as on the economy. So markets definitely would fear any negative news or volatility. So we might see some trade range bound happening at least for 2 to 3 weeks, until all the bad news fades out. So till then we might continue strictly in the range bound scenario. If the situation worsens, then we might start trading below this level, and then start maybe inching downwards, and can come roughly towards 23,000 odd levels, which would act as a strong support. So until we trade on the higher levels above 24,000 levels, at the moment there is no much worry. Maybe once it starts inching towards 23,800 is what we have to turn cautious and cut off all the long positions. So till then we are in the safe zone and might trade range bound with the upside bias. Now let's see from the perspective of open interest. So on open interest, in fact, even yesterday we had discussed that after 24,500 odd levels, we do not have any strong resistance. So in case if the buying emerges swiftly, we might straight move towards 25,000 levels. But given the kind of market news that typically for the uh, India front, if we see, has not been that positive. Though despite the world markets have been really performing well, we had, in fact, not performed so great in terms of the broader indices today. All the broader indices, did not perform so well. There was mixed kind of reaction. Certain sectors were positive, whereas other sectors negatively performed. So there was no broad-based buying. So till that time we might see some range bound kind of trading that is expected to happen in the range of 24,000 odd levels to 24,500. So we are just 170 points away for tomorrow's expiry. So as long as we trade below 24,500 levels, we might continue trading in the range bound. Once we cross beyond 24,500, immediately we will see sharp rally coming in, and then we might touch 24,800 odd levels, where we have immediate resistance. Once that resistance gets crossed, then we will reach towards the round figure of 25,000, where we see huge resistance coming in, which seems to be difficult until the end of this month expiry. So we have just maybe 5 odd trading sessions in April month. So till then we would be closely trading in the 500 to 600 odd points range. So overall on the PCR front, if we see, it is it is one trading overall and zero 0.8 at the money. So it seems to be quite positive, but yes, given the way how the charts have behaved today, it seems to be difficult for Nifty to close above 24,500 or close the weekly expiry or monthly expiry above 24,400 odd levels. So tomorrow already we could see the gift Nifty is trading 70 to 80 odd points down, despite the world markets including US markets have really performed well. So this is just a India specific scenario or issue, why our markets have not been following the world markets typically, despite the US performing really well. So since there is a bad news that is around us, so we might have to trade cautiously until 23,800 levels breakdown at the lower end, and 24,500 to 800 level that breaks out at the higher level. So till this range, it is okay. We might trade in consolidation. Now let's talk from the perspective of Sensex. So even Sensex shows kind of doji, or maybe the kind of hanging man. So as we had already discussed, this is the zone where we have huge resistance for Sensex. So we had immediately touched today, or maybe opened at the higher level, but from there we had uh, swiftly fallen down at the lower end of previous days closing. We saw sudden buying that had emerged, and then after 11 a.m. we saw strong buying which continued towards the higher opening levels that we had seen in today's morning session. So overall, Sensex had closed strongly above the previous day. However, there doesn't seem to be strength in the markets for further to be taken at the higher levels. So we might, trade in range bound for at least 1 to 2 days until the bad news that surfaces around, and post that, if the buying emerges further, then we might see Sensex again moving upwards and might approach towards the previous resistance of 82,000 levels. So till the 82,000 is crossed, we might trade in a range bound kind of scenario. So the major caution that has to be kept is somewhere around at 79,500 odd levels, where we had from where we had starting to see the weakness. So immediately once we start falling or trading below the 79,500 odd levels, that is the first trigger for us to cut down on the long positions. We can take at the money kind of calls, which will help us to maybe sustain and not make losses, despite there emerges a positive kind of scenario maybe in a day or 2 days kind of session. So overall, we are trading in a weaker kind of momentum. So we might start seeing some pressure coming in at these levels, and we might start trading below the previous days close. So once that happens, that would be the first trigger for cutting down on long positions and taking at the money calls to just see how the market is expected to behave overall. So Sensex has to be traded cautiously until maybe 2 to 3 trading sessions. So now let's see from the perspective of open interest. So on open interest, there is like a tug of war at 80,000 odd levels, where both buyers as well as writers have been fighting to push each other, and uh, call writers have been trying to uh, take the markets down and trade below 80,000 levels. At the same time, there is a good strength and momentum that is seen on the put writers, and they have been holding the markets. So as long as we start trading below 79,800 odd levels, till then it is okay. Once it starts moving down, then we only have the support at 79,500 odd levels. So for 29th April expiry, we have almost 6 roughly days. But yes, uh, there is strong belt up that is happening on the call side at every 500 odd points. So we might see some resistance at the higher levels going forward, and till the bad news remains, we might not be moving swiftly higher. So at the lower levels again we see strong support at each 500 odd points at 79,500 levels, 79,000 levels, and the last support is at 78,000. So till the time we trade in the range bound scenario of 79,500 odd levels until 80,500, this 1000 points range, we need not too much worry, because markets might then consolidate and not maybe trade beyond these parallel lines. So as of now PCR is zero point 0.9 overall, and again 0.86 at the money. So majorly we might trade at least for 2 days in this 1000 point range, and then once there is a clear indication that is seen, and based on the world market cues, how the rest other world markets are moving, so we might start taking the stance as per the global markets, and then accordingly trade. So yes, we are in the tight range now of 1000 points. So until the breakdown or breakout, we can trade in the consolidation phase. Now moving on to Bank Nifty. So on the Bank Nifty side, it is a bearish engulfing that we had been seeing. So it is not a full engulf that we had seen, but yes, a big candle that has been created. So it opened higher, but then there was a selling pressure from the start of the day itself, though in between markets tried to recover, but there was a good selling pressure on all the banks today, as majority of the major private banks sold off. So that is the reason we were unable to recover despite positive cues coming in from the major indices like Nifty and Sensex, as there were lot of positive sectors like auto and IT, which had taken the Nifty and Sensex index higher. However, banks have been trading negative today. So today's closing was below the yesterday's closing, and there was a sharp downfall that we had seen at the higher levels. So this is the first indication of the weakness in the Bank Nifty. However, since we had seen a strong rally that had already emerged, so this is the first negative signal among all this positive uptrend movements. Now we have to trade here very cautiously. So we might see a kind of movement where it was all rallying and positive, and then from here we fell down. Now this might continue until maybe the previous resistance levels, which will act as a support, so roughly around 54,500 odd levels. And from here we might see the turnaround happening again, and Bank Nifty inching towards 56,000 levels, 56,500, 57 and above levels. So we have to closely track and monitor 54,500 odd levels, from where we had swiftly seen the markets moving up. So as long as this 54,500 level do not break, we should remain long in Bank Nifty. And with the immediate first sign of recovery, where from wherever we see the turnaround happening or the reversal happening, there we can quickly go long, because there would be a good momentum that we can catch up. Roughly around 1000 to 1500 points can be easily captured once we see the turnaround happening from here on. So we have to trade cautiously here until the 1000 point range, from here till 54,500. If we see the reversal immediately coming in, then we might see the higher highs in Bank Nifty again, which would take the Bank Nifty to 52-week highs, or maybe all-time highs. So as long as there remains positive momentum in the banking stocks, we can continue to hold the long positions. Now from the perspective of PCR, so we are trading in the tight range bound scenario, where we have the put writers also holding and not letting it the bank nifty to fall. At the same time, we have call writers also who have strongly been holding at the resistance levels. So today we had seen bank nifty open roughly around 55,800 odd levels, and then it moved higher towards 56,000 odd levels. Immediately once we inched towards 56,000, we saw a strong selling pressure that had come, and today's open interest positions what we could see for 56,000 strike definitely talks a lot about the monthly expiry for bank nifty tomorrow. So maybe we would see a bank nifty closing in this range, or there are high possibilities for it to close around 55,000 odd levels, or below 55,000, maybe 54,800 odd levels. So till then we still remain positive until 54,500 breaches. So yes, tomorrow being the monthly expiry for Nifty, Bank Nifty, Fin Nifty, so we might see a lot of volatility coming in, and we have to trade cautiously given the fact that there is already a negative news of terrorist attack, peculiar to Indian markets. So as long as there is no major sell-off, we will be trading in the range bound scenario. So overall on PCR front, it is 1.1, and at the money it is 0.88. So it is from the trading perspective for tomorrow's session, it is mildly bullish to positive. Lastly, on the Fin Nifty had the clear bearish engulfing candle. So this itself signifies that there is a selling pressure that has come in Fin Nifty, and from here on we might start trading on the downward journey. Now this downward journey might be for 3 to 400 odd points, and then at 26,000 odd levels we would sustain, provided there is no sharp major sell-off that comes in. So as long as Fin Nifty is trading above 26,300 odd levels, that is the um, today's lower levels, till then it is okay. If we open tomorrow below those levels, then the sell-off is again expected to continue tomorrow. So given the volatile session that is expected due to market expiry, we might see some sharp moves both on the upside as well as downside. So we have to trade cautiously and do not get caught in the volatile markets. So overall, since VIX is trading in the range of 16, we might not see sharp moves though, of like 300 400 points on either side. But yes, tomorrow's trading session is going to be weak for Fin Nifty at least, because there have been a good sell-off that we had seen at the higher levels. So tomorrow again we are expected to see some sell-off or a kind of range bound scenario in which we would trade. Let's look from the perspective of open interest. So on open interest, we could very clearly see that at least for tomorrow's monthly expiry, we are not closing above 26,500 levels for tomorrow, given the kind of huge open interest that we had seen that was built on the call side. At every 100 points, again we see good open interest built up that was seen today. So majorly, Fin Nifty is expected to close below 26,500 odd levels. Now if we start moving downwards, maximum we might see towards 26,200 odd levels as the first support, and then 26,000 levels as the second support. So tomorrow we might not expect swift movements towards the downside. So as long as 26,400 300 odd levels is held, we might not see sharp downfall coming in. So overall on PCR front it is 0.9, and at the money it is 0.57, which is not at all bullish. So overall on FINNIFTY, we could see a lot of selling pressure that is expected to come in, which would take FINNIFTY down below 26,500 odd levels for tomorrow's monthly expiry. Lastly, on the FII and DII data. So foreign institutions on the index futures are short by 70,000 odd open interest contracts. On stock futures, they have increased their long positions to 18.19 lakh contracts. On call options, they are long 1.46 lakh contracts, and on put options, they are again long 99,255 contracts. So net FIIs have turned positive or long on index options by 46,000 odd contracts. On proprietary trader side on index futures, they are mildly negative with 2,700 contracts. On stock futures, they are positive and long with 40,500 contracts. On call options, they are short by 48,000 contracts, and on put options, again they are short by 1.38 lakh contracts. Now net again, proprietary traders have went long today with roughly around 90,273 contracts. So overall, both FIIs are long on options, index options, and similarly proprietary traders are long on index options. So now let's see if clients are net short. On the client or retailer side, if we see, they are mildly bullish on index futures. On stock futures, they remain long with 17.05 lakh contracts. On call options, they are short by 98,000 contracts, and on put options, again they are short by 31,000 contracts. So net retailers are short by 66,500 odd contracts. So when both FIIs and proprietary traders are long, and retail traders along being short, though there have been global markets which remained positive, but somewhere there was a weakness that was seen in today's market overall in major indices, barring maybe Nifty 50 and Sensex. Rest other indices traded not so positively. So we might see some weakness tomorrow on the monthly and weekly expiry for Nifty. So overall, if we trade below the previous days, like today's session, then it is client who is going to or retailers who is going to mint the money, and FIIs and maybe proprietary traders would lose. Now, from the perspective of cash market, DIIs have sold 1,234 crores, and FIIs, however, have bought to the extent of 3,333 crores. So roughly around three times FII has absorbed the DII sell-off positions. So as long as FIIs remain positive long on the Indian indices, we can remain intact and positive, because there would not be a lot of huge sell-off that is expected to be seen. So overall, from the trading strategy perspective, if we have to stay bullish, but yes, watch for the profit bookings at the higher levels. So today's market rally was broad-based, supported by strong global cues as well as sectoral strength. Uh, as long as there is positivity across the world markets, we might stray and remain positive. But if there is any India specific news that comes in, then we might sharply fall and take down the immediate resistances what we have across all these four indices. So that's it maybe for today. If you like this video, please don't forget to share and subscribe for our daily market updates. So drop a comment. What is your take on today's market movement, and did you like today's analysis for tomorrow's market approach? So if yes, then give a thumbs up and comment in below this video. Thanks. See you until tomorrow's trading session.